Hey guys, this is Mark Shawson, the Pattern Trader. Let me quickly read a review that was just put on our website, the review website by Terry. Terry says, Mark presents a very practical and down-to-earth trading system which is not focused on the brain farts, so that's his verbiage, not mine, of today, but purely on historical patterns. It removes a lot of the guesswork, and the more you work with Mark, the more confident you become in seeing what he sees and why the market will move that way. I've made 350% in the last 3 months. That figure should have been around 490%, but my exuberance got me into side dabbles and day trades. So thanks for that review, Terry, and watch your risk because it's nice to make 350% in just a few months, but probably means you're risking quite a bit. Now I'd like to talk to you about one of my recent trades. On most every webinar I do, most every forum I do, the inevitable question that always comes my way is, how do you set your stop loss? How do you set your take profit? And this is a difficult discussion because it's not like I'm trying to hedge my way out of it or I don't understand what I'm doing. It just every trade is different based on the setup, where you're getting in, if you're catching the trade right as it's coming out of a pattern, or you're catching a trade that's part of a mature trend, in which case your take profit horizon will be lower than where your entry is if you get it right as it's busting out of the pattern. And so I'm going to talk about one of my recent trades, and perhaps by virtue of this example, you'll understand a little bit of my trading methodology and what I'm doing. So let me see. It was Sunday, June 14th. I sent out a trade. I'm going to put a picture up on the screen right now of that trade. So as you can see on the chart, the trade that I was talking about was the pound versus the Japanese yen. And this was a weekly trade, which means that the entry order was meant to be open for the entire week. So this particular trade went out on Sunday, June 14th, with a sell limit at 136.27. And the market was obviously trading below that. And so I was projecting that the market would rally and then collapse. And that's basically what it did. It's a little bit tricky to put these limits in. I don't usually put orders on limit orders because you never know how much a market's going to rally before it collapses. So it was a little bit tricky, but I ended up getting filled 2 days later. And that's also, I think, the beauty of my entry methodology, whereas I rely on the market to confirm the patterns I'm looking at. So I was looking at a host of bearish price patterns going back several years. So you'll notice back in 2015, we had what I call a governing double top and head and shoulders bear price patterns. And when I say governing, when those patterns were confirmed, it governed or dictated the price trajectory thereafter. And as you can see, by virtue of a host of bearish price patterns that projected a decline in prices, that's exactly what happened. When the pound yen collapsed from 195 to 120 after this critical double top price reversal was formed. And this also encapsulates and kind of confirms my trading methodology, where simply looking at price patterns will tell you where the market is pointed, where it's directed. And if you'd seen this very simple double top 5-6 years ago, at 195, you could have made $70,000 for every $1,000 you put up. Now, after it collapsed to the 120 level for the last several years, it's put on a huge rounding top, which to my mind projects that the market will eventually go lower. I think there's a lot of consolidation still to happen at this level, but I felt after a capitulation around the June 14 timeframe that there was not much risk on the upside, meaning that if I got short, that there was not much risk. So I send out an email to thousands of our members around the world with a suggestion to put a sell limit in the British pound versus the Japanese yen at a price of 136.27. 2 days later, that order was triggered, meaning that price rallied to my limit order. I was put in the order the market at 136.27, and then I had a stop loss protection behind it at 139.27. So I had the stop loss quite a bit away. I wanted to allow my trade to work, not be prematurely jerked out by just arbitrary trades in the market. I did have a trade risk profile of 0.75%. So if you understand how to use a risk calculator, you'll see that 300 pips is not a big deal. You're really just only risking 0.75%, and then you've got to calculate your lot size to accommodate that risk. But nonetheless, in my explanation below, I said since forming a governing double top head and shoulders bear price pattern several years ago, this pair has played within the boundaries of a rounding top bear price pattern. Recent price patterns and price actions suggest the downtrend will continue. And on the basis of that, again, we got executed at 136.27. And as my members know, I will stay in a trade for days, weeks, months, as long as the trade is working for me. And it turned out that I was in this trade for 3 weeks. And it dropped in my favor pretty heavily. And quite frankly, I had bigger open profits than what I ended up with. But I ended up having a trailing stop loss behind it. And I'm going to show you our entry management field that was sent out to our members to help them manage their trades. This is what I do every day. I send out, a new updated stop loss and take profit depending on the dynamic nature of the market. And then on July 1st, some 2 weeks after I entered the trade, when pound yen was still trading at 134.10, I suggested putting a stop loss in at 134.87. And I left that stop loss in. I let the market work. I could have taken more profits, but I left that trailing stop loss. You can see I moved the stop loss from the original stop loss from 139.27 based on the market collapse thereafter. I moved my stop loss 500 pips lower to 134.87. And that stop loss eventually triggered out my trade some 3 weeks later. I ended up only making about 140 pips on the trade and about $70,000 based on my confidence and my trade size position at the time. As I said, I could have made more. There was some open profits, but this is how I dynamically manage my trades. So I hope you got a ton of input from this video. If you'd like to know more or understand a little bit more about our methodology, just send an email to support@thepatterntrader, and we'll be glad to send you out some information. So with that said, I wish you a healthy and prosperous trading week, and I'll see you next time.